So I'm
Perfect.
stoked, buddy. But now look at everybody filling in. This is great.
Perfect. Right. Yeah. Usually we get around 30. In the early glory days of the NFT space in Enigma, we had over 300 at one point. It was
No way.
something. Yeah, it was something really exciting. We actually I remember, I think it was the first drop, um the first collection. We had this he called himself a metaverse DJ. Anything back then could fly, like, oh yeah, that
Yeah, yeah.
makes sense. And it was literally, I think his name was Tropix or something. And we paid him. The dude was like getting paid $400-500 to get into a Discord, and God knows what he's actually doing on the other end, right? All we hear is music, and then this occasional like wheel in the background, like, yeah. Like, okay. um, but that somehow drew a crowd of 200, 300 people, and honestly the vibes were really great back then. They're
Dude,
still great, I think, in Enigma now,
let's
but
let's
back
do that
then
again.
yeah, maybe I just don't know if I'd. It's a different. See, the crowd that's still in Enigma today, you have to understand, is a more seasoned crowd. Okay, um, they've weathered many storms, and they've had a lot of character building experiences along with the team. That if today I were to pay $400 to get a DJ, they would probably put my head on a spike.
Okay. I mean, it's one of those guys. Loudry is the one who got me into this, so I appreciate him. But I
Um,
can't see anybody putting your head on a spike if you've managed to last this long in this space. So
yeah,
DJ or not,
no, I joke a lot, but I
how did
think
you?
the communities. Go ahead.
I mean, I see the rooms filling up, so we could stop blah blah whenever you want. But I'd love to hear what was that initial thing that really got you into this, like way back in the day.
Oh wow, I don't know if this is a new feature. Sorry, this is tangential, but it looks like there's like an AMA stage text on the bottom right that you can click
There
on.
is.
Yeah, oh,
There,
wow.
yeah, those are normal in Discord.
Cool. Um, I first heard of blockchain when I was a medical student in Cleveland. I did my training at Cleveland Clinic, and it was like 2018 or something, or 2017. I heard of blockchain. To be fair, I heard of blockchain before that, but the first time it ever occurred to me that maybe I should capitalize on this new technology was like 2018. And I actually sent in the trench chat, which is like the channel with all the whales who have, I don't know, but I don't know how many NFTs you need to be there. Maybe like 60 plus of Genesis. Um,
Okay.
I think. But some ridiculous amount. But anyways, I sent them today actually a UI, a sample of the UI of the very first blockchain concept app I came up with. That well, the idea was to decentralize research, because the way that um, research works in at least the health field is, you get sick, you see the doctor, we have all the information about you, we take that information, we de-identify it, and we sell that information. Either we use it or we sell it, or we outsource it um, to research groups, or private, public, whatever. They use the data for R&D, so they design drugs that eventually come back to you when you're sick the next time and you have to pay for it. So
Mm.
technically, our data is brokered on many levels, and on each level, people are making profit off of your data. And then at the very end, a drug is produced, or a product that is sold back to you for more profit. So I thought that was a crazy broken system, but no one really thinks about it. It just like the other day I was talking also in the trench chat. I learned that, we're eating all this food, and, we pay for this food. It's kind of crazy, but we pay for this food, and then we ship this food out. Then they take our shit and they extract methane from it, and they use it to power water treatment plants. to sell us back this water. So, so there's a lot of these like circular models where you're both like the producer and the consumer of your own production in a really gross way. But so the first idea was why can't we, as the patients who own this data, which is, presumably protected information, why can't we get some of that money, that monetized money, on our own data? And so the whole idea was we just create this app where if there's any research group that's trying to access data that belongs to you fundamentally, then you get some tokens brokered by the blockchain. That was the idea. And so I pitched it at the time in a startup conference at Cleveland Clinic. And I remember this researcher from Harvard who stood up. He was like, so you want to use this technology that people use to traffic drugs and child pornography to put patient data on it? I'm like, dude, how did you get this far in life? Like, it's not even a real question.
It's hilarious.
Yeah, it's the same argument that people like. It's a very short-sighted argument. It's like I don't care what your stance is, like politically or whatever, but there are people who sometimes will just for weird reasons just hate on electric vehicles. Like, oh, fuck that shit.
Right.
And I never understood why there's some people that just fucking hate it. Like, why does it hurt you that we're trying to do something better for the environment? It doesn't matter what the political inclinations of these like motivated policies are. But electric vehicles, for example, I remember just like last month arguing with someone. They're like, oh, electric vehicles fucking suck because you buy this vehicle and then you have to charge it every like couple of days. I'm like, okay. And then he's like, and there are no charges anywhere, like convenient. I'm like, well, this argument, yes, maybe a few years ago, true, but it's getting better. But like by that same logic, you should still be riding horses because when the first car was created, there weren't gas stations. What the fuck did you do? Did you just like ride? Why aren't you riding a fucking horse today then? It's like the same short-sighted arguments that come for cars and for blockchain, and it just is the same thing. It's people just unwilling to adapt and understand new technologies. It's just like born of fear. So that's how it started. That's where I was interested.
Cool, man. That's a great story. I've always embraced tech. I was fortunate. I'm a Gen Xer, and I was fortunate, very, very fortunate to be able to be in grade 10, actually have computers, which were like floppy drives and green screens. But seeing the impact that had, and being hand selected, I mean, it was pretty cool. So that tech is the same thing. And there's an old parable that says the caravan comes to town and the dogs bark, but the caravan keeps moving. And to me, that's all this tech. It doesn't matter what these people want to say, what they think. This is not going anywhere. This is not it's not stopping. Blockchain's here to stay. It's groundbreaking. It's one of the most. It's actually, I haven't been this excited about anything. Like, I'm more excited about this than I was about all the internet stuff in '99.
Yeah. Wow. That says a lot. I agree with you. That's cool.
Big part of it, we all know how to capitalize on it better too, right? And the exponential growth is way quicker because of the tech from '99. So it's fascinating. Anyhow, dude, I think I see JT saying a few things, and I can always.
Where's JT?
He's in the gym. He says he's listening in the gym, but he can't talk.
Damn.
As you can say what you like.
I'm surprised he's still. I was talking to JT yesterday for some time. I'm surprised he still has a voice.
That guy's been working hard for your team, man.
Yeah, he has. It's an invaluable asset ever since he's joined. All right, well, you can continue working out in the gym, JT. Actually, I don't think he even hears us. So, anyways, thanks for keeping the dialogue going, Nana. We call you Nana?
Yeah, Nanaimo. It's NanaimoTrader, but NT works or Jeff, but NanaimoTrader is what everybody knows me. Nanaimo is the city I live near on Vancouver Island, and so when I started getting really active trading in 2012, I used that name, and it's just kind of stuck. Yeah.
I would encourage you to go by Nana, because then people would think about Rihanna, and who doesn't love Rihanna? All right, sounds good.
Cool. That's funny. So do I get to go first with the question?
Yeah.
So I'm curious, how will the rising difficulty impact the mining rewards of the L7 miners?
It's hard. I mean, it's hard to say, because we know that. So, for example, over the last 5 days, the difficulty of mining Litecoin, Dogecoin. So we use the script algorithm so we use L7s, and then the L7s mine the script algorithm. It's gone down by like 25% over the last couple of days, whereas Bitcoin has only been going up. So if we see this divergence, and your intention is to mine Bitcoin, it doesn't matter really, because you will never outpace Bitcoin's difficulty increase using an L7. So that's the first that's the first premise. If you're looking to mine Bitcoin, you really shouldn't care what's happening with the L7 mining difficulty, because it will never outpace Bitcoin. And the longer we see this divergence for, the more you're benefiting. But that's the first thing. So the second thing is, the obvious answer is higher difficulty means less reward. And then the third point is, typically you see the price compensate for the increase in mining difficulty. And this is true of also the halvings. Like when you look at halvings, halving is not an increase in difficulty. It's actually usually a decrease in difficulty, because a lot of old models fall out of the network because they're no longer efficient or profitable. So you see a decrease in the mining difficulty of the overall pool, but the reward is halved. So you don't exactly lose 50% right away. You lose somewhere closer to 25 to 30%. That's based on the historical data. And this is Bitcoin. I'm not talking about Litecoin. Litecoin's never halved, so we don't know.
Doesn't Litecoin doesn't it have a halving in August of this year?
Does, yeah. Yeah, but it's never halved before.
I see.
And the thing with, I'm pretty sure that's accurate. And the thing with L7, so there are a few reasons why buying into an L7 is better to mine Bitcoin, is better than buying into a Bitcoin ASIC. 78% of what you mine is profit when you're using an L7. 30% of what you mine with a Bitcoin ASIC is usually profit. It's like it varies, like 30 to 50. For us, it's usually hovering between 40 and 45. For most people, it's between 15 and 30. So that's the first thing. Your output translates to more profit when you're mining L7. The second thing has to do with the actual network. The network is much less saturated, so the mining difficulty accelerates at a much slower rate than Bitcoin's network difficulty. The third thing is the halving. When Bitcoin halves, your entire output will be hit when you're using a Bitcoin miner, because it only mines Bitcoin. But with an L7, about 70% of the profit is due to Dogecoin. So if 30% is due to Litecoin, and Litecoin is halving, then you're really only getting a 15% overall hit, assuming the difficulty of the network doesn't change, which it does. So you can actually adjust that downwards. So a lot of people are overthinking this halving. And then I'd make the last point is that there is no other option. You're going to halve somewhere. You're either going to halve mining Bitcoin, or you're going to halve mining Litecoin, Dogecoin. And if your goal is to never encounter a halving, then you're going to have to wait 6 months. And so the problem with doing that is you don't know if you're going to be in a bull market. These machines were $27,000 in a bull market. They're $6,500 when we just bought them. So It's like, you cannot really outpace the market, because if you're going to wait because you're afraid of a halving, also think of it this way. You buy the machines today, you got 6 months of mining. That's 6 months out of an 18-month ROI. You've already made up ground. So say the halving, the worst case scenario, bumps you up another 3 months. Now your ROI is 15 months from the halving. But now you're entering a bull market. You acquired these machines at 6,500 versus at 10, 15, 20,000. And suddenly your ROI goes from 15 to just 6 months because we all know what happens after halvings usually. So if the market follows the trends that it usually follows, this is the safest bet.
Yeah, that makes total sense. I especially when you lay out the ratios that way. So I guess so. Really, in a way, like if let's just say for easy numbers, if I guess if the profit ratio 70% comes from Dogecoin, 30% from Litecoin, I was thinking like, what would it take? Let's say you did $150 worth of Litecoin. How long before you'd get your actual Litecoin back?
Say that again.
Let's say instead of talking in US dollars, let's just say if you just went with Litecoin, let's just say, for example, one Litecoin, how long before you'd get that one Litecoin back? Actually back from the profit of the miners. Because I'm thinking rather than thinking of being paid in USD, I'm thinking of being paid in Litecoin itself.
Yeah. So it would like you're saying, so you put in $1 into the machine and you only want to calculate the dollar output in Litecoin. That's it. So
I'm saying if you put Litecoin, if you looked at it from Litecoin, let's say you did one Litecoin worth, how long before you'd expect that Litecoin to come back? Would it still be the 18 months, or does it adjust because what's interesting, if you calculate it based on Litecoin and not USD, it's a bit of a different calculation, I think.
It should be the same because actually what happens is the calculators are all taking output in the native coins and just converting it to the current market price of the coin. So it's at the instantaneous moment of the calculation, it's exactly the same. The problem would be if you calculate it today and then Litecoin's $150 tomorrow, you would have to redo the calculation. That's why the market price of Litecoin and Dogecoin affect the ROI.
Right.
So it's essentially it's the same because you're actually getting USD value, but that's from the output in the native coins.
Okay, makes sense. So then, if we took it in BTC, JT's mentioned these escrow accounts. Can we take it, our returns, our rewards, let's call it, in BTC, move it into an escrow account, and then link it to a Lightning node that can earn fees? Like, could our BTC sit in an escrow account and then be linked on the Lightning network and earn its fees while it sits there?
I don't know. This is not something that we've considered.
Okay, that'd be pretty cool. Who controls the escrow account?
We do. So it would the escrow account would be an account that basically it still belongs to us. So we have custody over it.
Okay.
And because the process of if it were so the whole point of an escrow account, at least as from the perspective of the people who requested it to start with, because we didn't want to do that. It's an administrative burden. We don't really gain much from having an escrow account. Is people don't want to be taxed, right? They want to keep their stuff off of their wallets because they want to just reinvest it later. That's fine. You would know where your escrow account address is, so you can see the amount that's in it, but you wouldn't be able to actually go in and control it. Because if you would, then that theoretically means we'd have to expose your seed phrase.
Right. Sense. I just was wondering if it was if it was truly you, or if it was like a legal escrow account. That's all. Where it's like, yeah, this law firm has it now, and they unlock it as per law.
No. I mean, what we prefer is you guys give us an address, call it your escrow, right? But this is now a game of like semantics because it's technically your wallet. So like, what difference? So what difference does it make if we sent you this money and you just held on to it versus if we just kept the money for you and held on to it, right? No one knows it's your wallet until you declare it, right?
Yeah.
So we don't want liability, but if we wanted to follow the law, then we have to call an escrow wallet, and it can't be yours because if it's under your custody, then you should be taxed on it.
And of course, all of that depends on the jurisdiction that you're under, too, right? Like there's some jurisdictions that say, well, until you sell it into something, it doesn't, So it all depends on one's jurisdiction, of course. But my personal take is I won't be doing escrow because I go on the premise of not your keys, not your coins. So
we hope nobody does escrow.
Yeah, I can see why. Totally.
We hope nobody does escrow, but it's if they do, it's fine. I mean, we have the legal structure set up already, so it's not a big deal. It's just liability. We don't want to have 1,000 wallets.
Yeah, that'd be just a headache. So, I'm going to turn over some questions. I got just one more here though. So, with this new purchase, does that means that because you basically got because the machines were bought for $6,500 today instead of the $7,200 that was forecast, then that means that our percentage of a machine that each NFT represents would be increased, correct?
Yeah, that's correct. So originally, in the very beginning, when we started talking about V5 or EMF1 now, it was 70. It was actually 80 NFTs will equal one miner.
Your L7? Yeah, just to be clear. Yeah,
one L7.
Yeah.
But then we were able to leverage our supply line. We've spent over $3 million with them. They do this thing where like it's a smart system, honestly, and it works because the more you buy with them, the more credits you get. And so these credits you can actually use to discount bulk orders, even below up to about 5% margin. So they get so if you look at these machines on Bitmain, I'm pretty sure they're selling for about $8,000.
Yeah, I looked them up.
Yeah, somewhere around there. That's $8,000, but because it's Chinese, there's a 25% import tax. So you're actually going to be paying $9,000, or you're going to be $10,000. You're paying $10,000 for these machines. So what happens is a lot of these suppliers are not in Hong Kong, they're in Taiwan. And so what they do is because there's no import tax between Hong Kong and Taiwan in the US, they buy it from Hong Kong in bulk, close to manufacturing cost, because they typically have like sales contracts with Bitmain. So they get it at a price, let's say $6,000. And then they sell it out of Taiwan to the US. So there's no import tax there. There is, but it's not 25%. It's like 0.3 or something.
Mm-hmm.
And they mark it up about 30%. So you pay about $8,000 buying it from Taiwan. So you save $2,000 buying it from these suppliers. We managed to get it for $6,500 because we used their credits.
Wow. I wish I had an applause feature. Dude, that's amazing. Like so that radically shifts. So what are the numbers then? So what does one NFT equal now under those new numbers per what percentage of an L7?
Let me see.
I mean, I guess I could calculate it, but you then I know yours are accurate.
Yeah, no, it's 1.723%.
1.723% at a $6,500
and that's
purchase.
$6,500. That's including shipping. So actually, it's $6,350 is what we're paying per machine.
$6,350.
Yeah,
and that's with shipping.
No, $6,500 is with shipping.
$6,500 is with the shipping. Got it. Yeah.
And usually anybody in our place would be making a 15% margin, so they'd be selling it for 7,000 something. We make $0 selling these machines. Zero. We make $0 selling these machines to you guys. When we set them up, no one's paying us to install them, right? It's usually $45 to install a machine. We're getting $0 to install them. We're getting $0 to initiate the machines, the software, all of that, hook them up. Usually that costs money. And we're giving up shelf space to machines that are making us $0 in installment fees and $0 in premiums. So the whole concept of why we would do something like this is because we want to show people that you don't have to go to DeFi and lose your entire savings like I did. Okay, I'm not being insensitive. I lost like $90,000 in literally a month.
Oh, dude, damn! Sorry to hear that.
It's okay. It's expected. But that's DeFi, right? Everybody is so excited about Coinbase staking and 6.5% on Solana and 6.9% on Algorand and 4% on
it's just bullshit. It's all bullshit. Bullshit numbers. I hate LPs, and this is why I've been promoting what you guys are doing, like being a soft promote anyhow.
So we don't need. I don't care to make $50,000 on selling machines to my community. I don't care about making $10,000 installing machines for my community. I only care about showing them that there is a way to make a stable yield when you're mining crypto. And to prove it to them. Unfortunately, crypto mining is so lucrative, but you don't get, like most end users like you guys and us, us in the past, we never really understood how lucrative it is because we're getting shafted at every level, right? Like most people are still hosting right now at 7.6 cents a kilowatt hour. So they're making maybe $20 less. They're making maybe $10 a month on a $5,000 investment buying Bitcoin. It's like they're breaking even in 36 months. That's the standard. We were supposed to break even 18 and a half months, like 3 weeks ago when Dogecoin was 10 cents. We're still breaking even 18 months, 18.2 months, when Dogecoin's now 7 cents. And Litecoin's not 100 anymore. It's like 80 something. So we're getting a stable 64% APY. I should say you guys are getting when you buy these machines. So it's possible. And the greater vision is those people who are chasing those measly 10%, 30% yields on DeFi can realize that they can actually set up a sustainable farm for themselves that is going to bottom at a 50 to 65% annual percentage yield, which is crazy. And once people see that, because it's even you can have all the math, you can have all the data, people won't believe you until they see it. So once they see it, and they see it's working, then when we do V6, V7, V8, people are going to be much less hesitant to truly build financial plans around these ideas.
I agree. And I think, like, for me, when I looked at it, and I asked a lot of questions and I did a real deep dive, and then I opened it up to our Trader Punk group and said, I need you guys to punch holes in this with me, help me out, because I was looking at, at one point was going to do like 6 figures USD into this. And I've since pulled back a little bit because I was like, okay, I need to just really clearly understand this. But the thing that really got my attention was that even when you forecast a decline, you're getting paid every 2 weeks. So your risk is constantly getting lowered if the market does pull back. And we're already down at a bottom that many people are calling that, 16K and Bitcoin's the bottom now. But who knows? Anything can happen. But even if we were to go to 10.8, which is your guys' break even, I'm still getting paid every 2 weeks. My risk is constantly getting lowered as that happens. But on the upside, oh my gosh, like it's phenomenal potential on the upside.
That's how I know you're a trader, because you're understanding the difference between one instance of an investment and an incessant investment. It's every day is another instance of an investment when you have a crypto mining machine. You have a decision to make multiple times versus one time. So a lot of times we get questions like, why don't I just put 10K into Litecoin instead of putting 10K into mining Litecoin? And tomorrow, when Litecoin is 150, I can get out, and I made a 50% return in one day versus 18 months.
Yeah.
And the reason is it's very simple. It's a complete misunderstanding of the difference between what value production and day trading. If you can buy Litecoin for $100 and sell it tomorrow for $150, you could do it twice. You're like in the top percentile. It's probably luck. You'll probably never actually end up doing it. And eventually, you're going to regress to the mean of losing money. You're actually better off just going to Vegas. So that's the reality is, one is a mathematical formula. The other is just gambling. One will produce value every single day, regardless of what happens in the market. The other is just gambling. So and then let's assume everything goes well. If you sell out, like we all know, you buy $100 in Litecoin, it's 150 tomorrow, you're gonna sell. You can't go back. You just sold, you're done, you're out. If you want to re-enter to get more Litecoin, now you're gonna enter at 150. So what ends up happening is people sell at 150, they're like, I'm gonna buy it back when it's 120. And it's like 160, 170, your stupid ass buys it at 180 and then goes back to 120.
Yep.
So
and I can attest to this as a trader. Like, I can make money and I can do really well and I've done it and I've posted it live where everybody can see, but it is a freaking grind to do that. And you have got to have a plan. You can't have any mental hangups with money. And exactly the things you're talking about. And the bulk of people shouldn't try to trade at a short term anyhow. It's one thing to invest long term, but the bulk of people, in my opinion, are just not trained to do that. And so I think for what you offer is very fascinating to me, because it allows it, again, it's that you're getting that income that's coming in. And yes, you are taking risk, but probably I'd have to say the biggest risk that I look at is the team, is you guys. Like not knowing who you are, not knowing where the location is, not a publicly traded company, any of that stuff, and I've done the, accredited investor route and those type of things. So I understand what it's like to get, all the information coming to you. So, probably the biggest factor is really for me is why I didn't put my money in is like, okay, I don't know who these people are. And if I was going to put a real big chunk in, I got to fly down, meet who they are, see the location, those type of things. But you do have a good track record in the community. So that's helpful for sure.
I mean, you hit the nail on the head. That's exactly the risk. When you're crypto mining, the risk is the business/operating relationship. It is that the most of the time, like assuming all the other variables are optimized, like you're not getting screwed in the ass paying 10 cents a kilowatt hour or 12 cents. A lot of times they'll bait you in by saying, hey buddy, you can pay 5 cents a kilowatt hour. That's your base rate. We'll never change it. 2 years, sign this fucking contract. You sign it. And then, machines do what machines do. They just fucking turn off because it's a little hot today. Or they just turn off because the internet went out. You can't control the internet company. You can't control the sun, right? And so what ends up happening is you frantically reach out to the asshole who's hosting for you. And he's like, remember when I told you it's a 48-hour dispatch? If you want any quicker dispatch, it's $15 an instance. $15 is the entire fucking revenue of that machine for the month.
Right.
So what ends up happening is people don't make money hosting because they're working with assholes. And so the biggest risk isn't the concept of mining and the model of mining. It's the assholes you're working with.
I totally get that, because in that situation, and that's what it boiled down with me for you guys, because I was like, okay, so what if they don't maintain their machines? What if they're, what if they have downtime? All of those things you just talked about, right?
You're right. You gotta wash these fucking machines. You gotta I forget the technical term, but you're using this massive sort of hair blower. And you got it every 3 fucking weeks, and you're not sitting there, on the dot taking log of when he last or she last cleaned your machines. And the thing is, it actually matters a lot It matters so much to clean it every 3 weeks, because if you don't, the dust accumulates in the intake fans. They get into the chips. Those pieces of sand are silicon, right? And they are abrasive. They will fuck your entire chip, and you're done. Suddenly, what ends up happening? You'll see this a lot. They'll say, "Hey, so your machine's kind of faulty. Bitmain. They do that. Bitmain. They produce millions of machines, so like it's inevitable. Some of these machines are going to be faulty." No, you fucking asshole. It's because it's stuffed with sand. He'll tell you, "Oh, I looked at the fan. Fan is okay. It's working. It looks like the hashboard's online. So I don't know what's going on. Must be some intrinsic damage. It's hard to measure, hard to quantify." An asshole.
And one of my friends that worked for Microsoft, and he's like, "NT, you've got to understand these machines are made for one thing and one thing only. And what you're describing is made specifically to mine Litecoin or Doge. That's it. And it's like all the time going hard. And if they do not take care of this correctly and properly, it will not do what it's supposed to do, or it'll break down prematurely. You won't get the rewards you talked about." So What do you guys do then? Like, what's your maintenance schedule on these things? Like, how those risks that you just talked about?
Yeah, so so right now, to be completely honest, the maintenance standard is 6 weeks. We're trying to hit 3 to 4 weeks. We've probably averaged 4 weeks, 4.5 weeks. But now that we have, this is talking about the past 3 months. We've mined for 4 months. So now that we have 4 times as many machines, we are hiring 2 part-time labor job to primarily maintain these machines, so that we can get them down to 3 weeks, which might be a little much, because you don't want to turn off 800 machines every 3 weeks. It's fucking pain in the ass, but you got to do it, because when people are making decisions on an extrapolated timeline of 3 years, 4 years, you want to make sure it gets to 3 years. You don't want the machine dies at 18.5 months. You're like, "Yes, I got my money back." Like that's not what people want.
And then the upside's huge. Like, let's just say over the period of 3 years, you had to actually spend another 2 months equivalent of maintenance dollar-wise. But if that gave you an extra year, that's an insane return.
Yeah, no, exactly. So, but there are ways. So, to answer your question better, it's not just about cleaning; it's about design. How are these containers designed? Do these containers have filters? What are the sizes of these? Like the filters have different properties. Some are thick and they're porous, but the pores are very small, so they filter out more things than thinner filters. The problem is there's a trade-off. You get a filter that's too thick, now you're impeding airflow. So you actually have to match the filter with the amount of airflow that goes, or airflux, in and out of the machine. Not to the machine, the container.
In the container, yeah.
Now there's a second layer, a third layer actually. So first it's the filter size, the filter compatibility with the container fans, and then the container fans compatibility with the machine fans. Not all machines can take the same volume of air in the same period of time. And so if you think of it, that's another compatibility factor, because if you have a lot of times people will build these containers and go like, "Bro, these containers like fucking jet engines. They can suck all the air and just blow it into these machines, keep them cool." And that doesn't work, because it's like trying to fucking breathe with someone pointing an air blower into your face. You're not going to breathe. You would think, like, in theory, you're getting a lot of oxygen in 1 second, but you're actually choking because you can't breathe. So that's the same thing with machines. Machines are like a bunch of little respiratory systems. And if you don't blow air at a rate that is compatible with their ability to take that in and blow it out, you're just fucking the machine. So there's a lot of factors to it. And I guarantee you, 99% of hosts have no fucking clue.
Yeah. So, and then I mean, while we're on this old topic, um, you guys are making your money on the 20% that you take off the top, correct? When the mining, like let's say, again, for easy numbers, if $100 is made from the actual mining of the Litecoin and Dogecoin, 20% goes to the company essentially that's doing all this work. Is that right? So these fees, these things like maintenance and security and stuff like that can get paid?
Yeah, so anywhere from 16.5% to 22.5%. That's for retail. So people like me, you, 16.5% would be the likes of the whales in the trench, because there's a discount system that
Right.
translates from your Genesis holding to all your other hostings. And it's like 10 Genesis reduces your hosting rate by 1%, from a baseline of 23.5%. But if you're an Enigma holder, it's 22.5. So a lot of them have enough NFTs to be hosting at 16.5%. So they save on average about 5% per month. The non-retail miners, they have a hybrid model. We hedge by giving them a flat rate, so anywhere from 7 to 7.5 cents a kilowatt hour. So we make the difference between our energy rate and what they pay. And that's a lot more than 20% of profit, FYI. So when we get those fixed rates, it actually makes a lot more money and helps us cover costs a lot more effectively than doing profit sharing. Profit sharing is exclusively to hedge the retails against a bear market that's prolonged or for whatever reason unprofitable. So that's why we do profit sharing. And then the upside for us to do profit sharing is, in a bull market, our ceiling is not capped either. So if one L7
like
is
that.
one L7 is like making $370 a month right now, we, in the L7 could be making $1,000 a month. You double your profit and a half. We double our profit and a half. So that's the upside.
Yeah, and just for everybody listening, that means they have a vested interest in seeing you succeed. So it's like in prop, right? Like if I back somebody trading prop and I give them a count of 25,000 and say, okay, you got to trade this and make money. My 25K is on the line. That guy's not making any money unless I help him make money, or unless he succeeds and then I make money. So I really like that business model quite a bit. And it's how I try to pay people also. So everybody is pulling the oars in the same direction. So I just want to make that point. But hey, Commander, you've got a couple of questions coming in. You want me to read them to you? They're in the chat.
Oh, yeah, I'd love that. And by the way, thank you for volunteering to moderate this.
Yeah, I've done lots of it. So, yeah, thanks. I've done lots of it. So happy just to jump in and help out. And I just adjusted my schedule because when you said you were going to do an AMA, I was like, okay, this is going to be great. I want to be in on that. But Nova asks, sorry, haven't been caught up. Is the consensus that the V5 NFT is better than buying the miners with buy and host? And guys, get your questions in if you want me to ask them. It'll save a commander having to scroll through everything to find them.
So that's a good question. My personal opinion is, actually, look, I'm not going to answer that question. I'll just give you the facts. So the facts are this. When you buy an L7 straight away and you have one L7, first you need to have the entire amount to be able to do that. Okay, that's a given. So the second thing is you put all your money, presumably, that you wanted to invest in crypto mining, and you have one unit. Now, on average, from 100 units we receive, 2 to 3 have an issue. So the odds that your machine is going to not work, it's about 2 to 3%. If that happens to you, you can't mine at all. You'd have to wait. We'd have to return it back to Bitmain. That whole process can take 6 weeks. So you'd lose 6 weeks, month and a half on your ROI. That's not good. That's, it's about 8% of your entire ROI has been prolonged. Yes, the probability is low, but that's theoretically one disadvantage. Now, the third thing is machines hash at different rates. Like when you buy a machine, it says 9,050 mega hashes. That's an average. Some will mine at 8,900. Some will mine at 9,200. If yours is mining at 8,900, you've lost 3% of your hash rate. Now, the more units you have that are hashing together collectively, you're going to get the true mean hash rate. So you will have a more stable hash rate if you were mining in a pool rather than by yourself. And a lot of the times it's an upward adjustment to your hash rate, because most of the machines that are actually mining higher with us, because our containers are very efficient and the weather tends to be very efficient. So to give an example, the L7s that we currently have, the 9050s are actually hashing at about 9230. So not all of them, but many of them. And that hash rate's going to decline over time, and they decline at different rates. So there's, again, this potential that your unit kind of sucks, and it's going to decay at a quicker rate. When you're mining in a pool, you kind of hedge against that decay because you're going to get the true mean decay. So it's another reason. And then the fourth thing is you can't hedge your positions when you have one unit. You either are all in or all out, or you have to buy more than one unit. And then if you say, like a lot of our whales, they have several units. So they can afford to sell some of them. But the question is to who and how, right? You're going to have to find someone. There's some marketplaces, I haven't used them. But again, now you have to go through that whole process of finding a legitimate buyer, and it's a hassle. Like, it's already hard enough to buy something off someone that is worth $30. Now you want to sell a $10,000 machine or whatever. So you get this ability to fractionalize your miner into pieces, and now you have the degrees of freedom to sell different portions of your position at different times in a much more seamless manner. So for all of those reasons, to me, if I were going into this, I would probably either buy a machine and ask someone to fractionalize it for me, which is what we want to do. Everybody who's hosting with us, the next step is creating an open contract that will produce NFTs that represent and fractionalize their miners so that they can have all the software capabilities that the people who are minting EMF1 have. Because we think we didn't expect that we would need to do that, but now we feel we were truly fully internalize the value of actually fractionalizing machines directly using NFTs. And essentially, at the very beginning, we weren't sure if this model is valid or it would fly from like a legal perspective. But once we were able to restructure the way we think about the model, which is people are actually buying machines and we're equipping them with software as a service mediated by NFTs, to us, that felt a lot more safe of a narrative. And now we feel like we can do that. And so if we equip people who are already hosting with us and have whole units, we give them NFTs, then we prove that model exactly. You're not buying an NFT with a return on it. You're buying a machine with an NFT representation. And so we feel like the next step, the best step, is to actually let everybody enjoy those software capabilities. So in my opinion, having an NFT grants you a lot of advantages.
I'll second everything you just said, man. I mean, like, why in the world would you want to have all your eggs in one basket if you could spread it out over 300 machines versus one, with the ability to take eggs out at any time you need to and sell them to somebody if you need to eat.
Yeah, exactly.
There's a question from let's see here, where are we at? RS Cartel asks, does that Genesis discount apply to EMF1S?
Yeah, it does. So the Genesis discounts based on how many you're holding and what they are. I believe it's like V1 or 2 10 of them will reduce your hosting by 1%. And then a mix of any 20 will reduce by 1%.
Okay. By the way, we're getting some comments. People are loving our chat back and forth on this and our questions. Dr. Jolly asks, what's plan B if Doge goes POS, which proof of stake, given profitability will be reduced to 25%? It's only a proposal within their community today.
You're saying that they proposed this in their community today? Is that
yeah,
what's...
Yeah, he said it's only a proposal within their community today, or it's just a proposal at this point. But is there a plan? What's the plan B if Doge goes? So, I mean, I guess you guys would switch to mining something else, or maybe you look at Doge and say it's not as profitable, you find something else to mine.
Yeah, so I think first to clarify the timing, I don't think that Dr. Jolie is saying that it was a proposal made today, but you can correct me if that is a proposal that was made today. Yeah, okay. So that's not it, because I've actually heard about this over a year ago. They talked both about Litecoin proof of stake. I mean, it was all sparked by Ethereum going proof of stake, and so everyone was like, well, why don't we do everything proof of stake? But you know, in the same exact vein, I'd say that a lot of people are also saying Bitcoin should go proof of stake, and that's just never going to happen. At least for sure, for Bitcoin, it's never going to happen. But for Dogecoin and for Litecoin, either way, there are community votes. And if you look at the distribution of the coins, the vast majority of the coins are actually held by miners. So if it were ever to come to pass, which, you know, I think it would take, you know, years maybe for them to actually propose it and have votes on it. And if it were to pass, which is highly unlikely, then I think we're years away. Again, I don't even really want to consider that as a potential, because it's just one of those tangential thoughts that were born out of Ethereum going proof of stake. But you can say the same thing about Bitcoin. People have said we propose Bitcoin proof of stake as well, and they've done that, and nothing happened. So
yeah,
I think Ethereum is different, because with Ethereum, the funny thing is about it is it's a very centralized decision. If Ethereum was a decentralized decision, it would have never gone to proof of stake. But you know, Vitalik and his little Epine wanted to prove to the world that he leans to the left. So that's why it happened.
Yeah, and personally, I mean, I can't see Bitcoin going to proof of stake. I mean, that just would be, you'd have to, the consensus and I mean, yeah, that takes away the whole concept of what Bitcoin's about.
And it's the same, I think, the same with Litecoin and Dogecoin.
And yeah,
Litecoin follows Bitcoin in both like administrative and like the economics of the coin.
And then the other thing is, I think a good point you made is the time for, even if that was to happen with Doge, you know, if we're looking, let's just say 3.5 years for these L7s before they crap out, and anything beyond that's a bonus. I mean, the chances of Dogecoin swinging and getting it through and all of that, I mean, is probably pretty slim, I would think.
Anything beyond 18 months is a bonus. But to be honest, I mean, not that I encourage thinking this way, but I think a lot of people, when they come and they buy these machines, they're not really telling themselves it's 18 months. At the back of their minds, they're all telling themselves we're going to recover. Because we're starting to approach the halvings of Bitcoin. And I think everybody knows like what typically is expected to happen. So most people actually have their projections of the next bull market landing in 2024.
So wait a minute, coming back to those machines, you're saying how long do you think a machine is expected to last, one of these L7s then?
Yeah, I'd say on average, probably 3.5.
Okay.
3.5, yeah.
Yeah, but you're saying the bulk of people are looking at a shorter term time frame, like they're going to really capture the rewards in the next 18 months.
No, yes. But what you said was everything after 3.5 is a bonus. I think that could have been interpreted as 3.5 as a break-even point. So I just wanted to clarify.
Oh, yeah. No, I guess for me, the way I look at it is I go, okay, so let's just use the 18-month scenario at break-even. right? So then I've got all my funds back. Um, After that, it keeps me making me money. I've got my funds back, so my risk now is at zero. If and my projections are at 3.5 years, which still means at that point I still have another 2.5 years. Anything past that 2.5 years is even more of a bonus. Like, what happens if these machines do go to 4 years plus, 4.5 years plus,
Right.
right? Yeah, I
Yeah.
mean, if you get something like that, and now Bitcoin's up at new all-time highs, and you still got machines. I mean, I guess eventually there's probably a point where you have to start, like, what do you just pull the machines out, and you start getting rid of them and just say, yeah, but if 25% of that container is still working, do you guys just let those machines keep mining, or eventually you've got to pull the plug, I guess?
So a lot of times there will be like these machines that just don't die, um, and they just begin to malfunction a lot. So really, when we say 3.5, it's you can stratify that into levels of efficiency. The first year and a half, you could say high efficiency. So you're expected to be around the average hash rate. The second year and a half, you're probably expecting it to be below your average hash rate, maybe somewhere
Okay.
in 20% realm. And then in the final 1.5 years, it's also going to be most likely lower. But it all depends on maintenance and all the. So what you can't do is, of course, we're assuming Litecoin, Dogecoin stay the same price. So what you can't do if you hold all other variables constant is take the output for this first year and a half and extrapolate that 1-to-1 for the next 3 years.
Got it.
But
Makes
I
sense.
feel like that's a given. I think most people understand that intuitively.
Yeah.
Yeah.
But you also make up for that with the halvening and everything else, I would think, right? It starts to balance out in assuming you've got at least a small trend up.
Yeah. So I mean, the best way to really um, sort of calm those concerns down is there wouldn't be a market if that wasn't the case. This is like multi-billion-dollar market, and if that wasn't the case, it wouldn't be a market. But if you look at the market, they all collude together, all of the manufacturers and distributors, they collude together to give you a 2-year break even. The 2-year break even is the standard in a bull market. So when you're buying an 18-month break even in a bear market, you're probably looking at a 6-month to 9-month break even in a bull market. But people don't buy in bear markets. So when you're buying in a bear market, you're almost guaranteed that the bull market outpaces efficiency or
Right.
the reduction in efficiency and outpaces the halvening and outpaces all of that stuff. Because people are buying in the bull market and they're making money. And when you're buying in the bull market, you're buying a 2-year ROI in the bull market, and bull markets aren't going to last 2 years. So you're getting your money back in the bear market. And that's going to take much longer. But there are many people in this situation now who bought in a bull market, and now they're still trying to break even.
Right. Yeah, that's a huge edge. Hey, there's a question coming up specific to this, but guys, there's an AMA text voice channel, but there's also AMA chat that's directly on this with the stage channel that people have been dropping questions in. So it's nice if you're able to just drop me in, because I just saw this one from Enigma Narwhale, and he asks, for our 3.5-year projections, we're talking about profitability, right? Not absolute machine death. If BTC goes 2 times, 3 times, or 4 times, we can extend the profitability period even with less efficient mining or fewer machines. Could you confirm with Commander?
Yeah, 100%. Just like the other day, someone posted this article on this person who had, I don't know, 17 terahashes or some shit and mined an entire block of Bitcoin. So technically, the answer is yes, but yeah. So I mean, yes,
Okay.
you're right.
Okay, so yeah, you got that Narwhale. He's saying he can't use the AMA chat, so I guess I'll monitor the text and the AMA chat on the stage. Another question in the text chat from Enigma Teleth. In terms of the hosting percent fee from this latest collection, how much of it is going back to scaling Genesis?
So 10%. So 10%. So the way it works is everything Genesis mines goes back to scaling Genesis. Everything that the buy and host produces, 10% will go to scaling Genesis. So, for example, that tweet I posted the other day, well, not the other, maybe it's been maybe 2 weeks or something, about what happens to Genesis hash rate if our buy and host capacity reaches like 20 megawatts. That effectively would translate to 2 megawatts. That would that the Genesis would be effectively producing. So there are two ways in Synergy that are scaling the Genesis pool. The first one is it scales itself, and that is unfortunately not as effective as being scaled by the second method, which is a buy and host, because we bought machines for Genesis when they were pretty close to maybe 70% of the peak, 75% of the peak. We averaged down, so that helped a lot. But we're buying machines now at the cheapest they've ever been for buy and host, which means for every dollar that we put into a buy and host machine, it's like $4 that have gone into Genesis, because they're about 25%, 30% the price. So we started Genesis, it was like 400 kilowatts. 400 kilowatts, many reasons why it was relatively small. But 400 kilowatts, to give you like some perspective, like 150 machines is like 500 kilowatts. So it depends on the machines, of course. But for Bitcoin, 150 is like 500, 600 kilowatts. So we started around there. And if we hadn't added any machines, we're still at 1.1 megawatts right now. Even if we do not add machines to the Genesis pool, it's still producing the equivalent of 1.1 megawatts. That's because of the scaling it gets from the buy and host. So at 20 megawatts, we would be around 3 megawatts effective output for the Genesis pool, assuming nothing hadn't reinvested in itself, right? So if our goal at the end of year is to have a 20 megawatt operation, then we can effectively think of the Genesis pool as it's producing 3 megawatts. That is about 6-7x where we started. And so then there's really no cap to how large Genesis can get. That is contingent on how large our business gets.
Very cool.
So one question is, well, it takes us 3 years to become 100 megawatts. All the machines in the Genesis pool are dead if we're not renewing them. My argument would be it doesn't matter, because if we were 100 megawatts, you now have 20 times the size with 0 machines.
We've got another question from, hang on a second here. Warrior Mama asks, if Doge becomes much less profitable, is it possible for the EMF1 miners to switch to 100% LTC?
I don't think that 100% LTC will ever be more profitable than LTC in some Doge, because you're not giving up more power to mine Doge. Doge is literally tagging onto the LTC in the script. So it's just like an added bonus. There are other ways to mine more profitably using L7s, and that's using market price algorithms. The problem with that is it's unreliable. So like if you go on some calculators, they're going to show you, today's price is like $16 a day for an L7 after cost, or 15, 16. But then you'll see some other options, other scripts that are saying $18, $19. Those are different. They may be good alternatives down the line, but right now they're just not reliable.
There you go, Warrior Mama. Question answered. Anybody else got some questions? AMA text, AMA stage, just hit them there. Warrior Mama's saying thank you. I do have a question though, like coming back to the team behind this, which is yourself and a few others. Is there anything, and having, and this is coming from a place of trust but verify. Okay. Is there anything that you guys can give us, even if it's privately, that would give us more confidence that we're not going to get rug pulled, or that you know there's not going to be a wallet getting siphoned out a back door somewhere, or anything like that? Like, say you
Yeah.
want to put, I want to put a big chunk in, or I want to bring a big group in. Is there anything that you do there?
Yeah, I mean, we have a company. It's registered in the United States. Our names are attached to the company. And the thing is, look, don't let my answer serve any more than just an objective perspective. Okay. When you talk about getting rugged, okay, let's maybe we deconstruct this question into human motives. Okay, so from the human motives perspective, why do people do what they do? Usually, it's because the gain is perceived as greater than the immediate risk, right?
Right. Yep.
And so when you look at where we are, and you try to apply the very basic principles of human motivation, the risk is way greater than the gain, way greater, because we have structures in place, right? We're not sitting in Bahamas or whatever the hell that FTX guy was. We are not separated by 30, 40 layers of corporate structures. It's not a convoluted model or system. So even the burden of having to be very transparent is pretty low. I mean, it's crypto mining and an NFT. It's really simple. There isn't arbitrage. There isn't marketplaces that are you interact with versus what market makers are interacting with. It's not convoluted model. Anyone can figure this out in 5 minutes. And it's just really hard to fabricate things. Like we can't say, yeah, we're mining 5 Bitcoins a year and secretly we're making 300 Bitcoins a month. It's not that case. So when you look at it objectively, okay, and just treat every human as equal, like no one's good, no one's bad. Okay, we're just human nature. There is really very little reason to be concerned that someone's going to come and rug a model like this. With our names out, with the structures, that's number one. Number two, okay, the less suspicious answer is we've been around for 2 years, and we're doxxed. We've been doxxed since like day 7, and I'm a doctor, and Steven is a dropout from residency. He's also a doctor, but I like to say that because it reminds him of how much skin he has in the game. So, and like a lot of the people who are whales, we've met a few of them actually in person. They have my phone numbers. We've seen each other face to face. It's really a Web 2 culture in a Web 3 space.
Right. Yeah, and please understand, guys who are listening, that question is coming from a place of peace. But I think it's a good question, right? Is sorting that out, because there's definitely a lot of potential to do really, really well on this, but also hey, if the market changes, it can go the other way too, right? So that's why I'm asking that question. You got to understand your risk. I got to ask about that, eh? Let me see if there's a few more questions here. People are giving me a hard time for asking the question. That's all good. It's my money, guys. So I gotta protect my own. Let's see if there's anything else. I'll jump over to the AMA text chat. The Warrior Mom is asking, for those of us who know very little about mining terminology, megawatts, hash, etc., is there a good resource you'd recommend to learn more? Just look for random YouTube videos. And someone's replying, YouTube's a great resource.
Yeah, honestly, I wouldn't compete with that answer because the YouTube tends to be very simplistic when they explain it, and I think you need to approach it first from a simplistic perspective so you can understand the model, because the model is straightforward. You buy a machine and the machine produces crypto, and then you can add layers to that understanding, like, okay, then what machine? And then, depending on the machine, it's mining a certain blockchain algorithm that will determine what the crypto output is. And then from that, you learn about hash rates. And from hash rates, you learn about the true hash rate, which means you have to learn about the power and the efficiency of the miner. And then from there, you can start calculating your kind of financial plans by thinking about how much money you put in and how much money comes out after you adjust it for the type of machine, the blockchain algorithm, and then the efficiency. So you follow those steps, and it gets pretty intuitive.
Cool.
The difficult part would be to create accurate expectations. That's the difficult part. But at any moment in time, it's easy to understand the instantaneous expectation. It's the projections that are hard.
Thank you for that. There's another question that I missed in the flurry of activity about asking about the rug guide. Fear of Truth says, how would I go about purchasing L7s outright for you to manage? And then puts in brackets, being an NFT holder. So I'm assuming they're saying, hey, look, I've got one of these NFTs. It allows me to purchase L7s outright. You guys take care of the management of it.
So is the question, how can he buy whole units or the machine? Or
Seer of Truth, if you want to clarify that, but the way it reads is, how would I go about purchasing L7s outright for you to manage? I mean, frankly, I think if I'm looking on their shoes, I'm going, I want to get the deal that you guys got on these L7s. I want to buy it. I'm going to wire you, let's say 10 of them. So I'm going to wire you $6,500 or $65,000, and there's 10 of them. And I want you to pay you guys to manage it. I think they're asking, how would I go about doing that? That would be my guess.
Yeah, no, that's how I interpret it. So many people did that not too long ago. So this collection was meant to do just that, but also give you the software capabilities that come with having the NFT. But before that, people were emailing us and telling us what they want, and we would give them updated prices.
So answer is email it in, guys, and you'll get your answer. Let's see here. I'm sure this has been asked, and it's probably simple math, but at what coin price do the miners become unprofitable? And I believe you've said publicly roughly around 10,800 Bitcoin. Would the expectation Litecoin and Dogecoin would be unprofitable?
Bitcoin will be Bitcoin mining using Bitcoin machines will be unprofitable at 10,800. Bitcoin mining using L7 machines would probably be lower than that. Probably significantly lower than that, maybe in the $7,000-8,000 range. But it really depends on what happens to the price of Dogecoin and Litecoin relative to Bitcoin. So for using L7s, if Litecoin and Dogecoin drop, so we can look at one L7 right now. If it's producing 78%, so this is crude math, 78% is profit. That means if the coins are half, then you would expect about 39% or 38%. 39% of what you mine is going to be profit. So theoretically, you can still profitably mine Dogecoin and Litecoin when Litecoin's 50 and Dogecoin's 4 cents.
Okay, there you go. I've seen another question being asked by RS Cartel. How often will you be releasing EMF collections? Will be important for people who want to roll back earnings into more miners.
Yeah, so it's no answer yet on that. We kind of want to gauge how this goes and get some feedback and see what people think. We're also working right now on satellite locations where we can actually set up mining at a 50% of the cost that we do it now. That might take 6 months. 6 to 9 months. So we've got a few things that we want to work on that's going to make everybody's experience and everybody's like profitability much better. And that's going to be our priority after this collection. But if I had to like give like some guesstimate, I'd say at the earliest, if we saw a lot of interest or a lot of new people coming in and wanting to add miners or do the same thing, maybe 3 months.
Okay. I have a question, but I'll ask it in a little bit because I think Dr. Jolly has tagged me in this and asked when IPO. And my thing is, I'm not sure you'd want to IPO. Why would you want to IPO if you can keep these returns to yourself? But anyhow.
So we can IPO the hosting part, but we cannot IPO the Enigma facility part.
And I guess the follow-up question would be, is there plans to IPO the hosting part?
Not currently. No, not currently. It would, yeah, no, not really. The one of the main reasons you want to IPO is you just want to raise a lot of funds. And so far, just using our sort of our internal networks, we're able to fundraise. Our overhead is not that big, but there may come a time when, you know, we find ourselves having 20, 30, 40 megawatts of empty space with a very favorable energy rate. And then we'd go like, all right, we need to make money. The problem is you kind of IPO when you have a mature cash flow and predictable cash flow. So you can't really IPO, I think, at this stage. We'd need a lot more private funding before you can IPO.
Yeah, and I mean, frankly, I'm not sure. I mean, everybody thinks IPOs are great because you can IPO and it's all going to go public and go crazy because, you know, the funds on NASDAQ have to buy it. But, you know, that is a possibility. But, you know, there's also a lot to be said for having those consistent returns hitting whatever wallet you choose every 2 weeks or every month or, you know, whatever they are. But I've got a question. So how could we compound our earnings at the beginning? Like there was some discussion in the chat that we might have a 90-day window to compound our earnings, which for me is very interesting because, and this is a big if, but let's just say if I could get 7% a month for the first 90 days, that gives me an extra 21% on my investment that if I, you know, compound it back into these you know, the V5s, version 5, that really gives me that accelerates my return over the next 3.5 years. Is that an option that we're going to be able to do?
I think it certainly is going to be an option, but I would say people shouldn't expect that in the beginning. Because in the beginning, it's going to be a careful process of managing payouts and managing wallets and managing all of those systems. And the last thing we want to do is integrate any more complicated softwares before we have the basics working swiftly.
All right. And now people want to know why they can't do GIFs in this chat.
Why what?
Or they want to know why they can't do GIFs in this chat. So
I think Turkey Slayer is fixing that, I think. But we will. I mean, like, look, when you get paid out and you put in an escrow wallet, we can do case by case situations where, you know, there are some people who have 200 EMF1s, right? In a month or 2 months or 3 months, they can have enough to pool with other people. But people who have 5, 10, 15, 20, it's just a lot of administrative work, and it's going to need a software to be able to manage that swiftly. And we just don't want to commit to doing something like this too early.
Yeah, that makes sense because you'd have to have a bot that would run it for you and hold it in escrow and then be buying it in the commitment. So, yeah, I could see that. Gnarly Josh asks, is V4 using a reinvestment schedule?
Yes, yeah. just so Genesis V1 to 4 is all in a reinvestment phase.
Okay. Enigma Teleth asks, when ICO, and has there been thought to what the function of the token would serve, etc.?
There have been a lot of ideation on how the token would function. It's honestly, it's too much to talk about. It's premature, but for one, ICOs are ways to pay back for a community. That's one thing, but it's pointless when the token doesn't hold any value intrinsically. So the value is probably going to do with staking, and that's the first thing. So the ICO will allow for one of the ways it would be distributed is through staking. This is something we've talked about before, and then some of the things that can be done with the token is really where it gets more interesting. One is discounting hosting, right? So if someone's hosting with us and they want to discount their hosting, they can pay. They can pay a fee with those tokens. So now you have a direct way to quantify how much each of these tokens are worth, because it would be related to how much is the value of the discount in like dollar value. And that differs, right? So for someone who has 400 miners, 1% for them is much greater than someone who has 4 miners. So then that's going to create a sort of demand. That demand is going to create a market force that's going to lead to price discovery. That's one utility. Another one would be, for example, allowing people who are getting these tokens to compound the yield of the tokens by putting them in a liquidity pool. So there's a lot of things that can be done. The token is going to be typical sort of DeFi, but backed by mining, and that's going to be the idea. And then there's other like tokenomics that we've ideated, but we haven't gone so far that it's something that's publishable yet. And the reason we halted that direction is because unfortunately ICOs are big victims of the market status. So you can't really ICO in a market that's not a bull market. You can mint NFTs to an extent. You can do that other stuff, but ICOs are very momentum based.
Okay. Dr. Jolly's asking, what was Azil's idea for ICO/IPO? He's just saying he can't remember what it was. Maybe you do.
I think I do. But we can meet. Dr. Jolie and I have a WhatsApp chat. We can just talk about it there at another time. I have to get going soon. But if there are any other like burning questions,
I think we've covered them all. I wanted to ask you what your thought was about Mt. Gox participants. They're going to receive looks like they're receiving their Bitcoin after 8 years. And then, we got some event risk, right? We got Mt. Gox coming out that they're going to probably get their Bitcoin. A lot of people that have sat on that for so long have made a lot of money. And chances are, even if, they got $1 million back in Bitcoin, they're probably going to sell a bit of it. So there's some event risk there. We got Ethereum getting unstaked. Here in the next, allegedly, you'll be able to unstake your ETH in the next few months. Do you see what's your thoughts on event risk for crypto market, as in it would push it down because people start selling?
So I wouldn't say like I'm an expert in the fundamentals of what drives Bitcoin's price and all. I don't know how many Bitcoins were stolen, maybe around like 800,000 or something, 800,000. So I know it's a significant amount of Bitcoin.
It's significant, yeah.
It's hard to predict what they're going to do, but I think we can all probably assume that they're not going to dump 100%, and it's probably on some release schedule where they're not all getting it at the same time. But then we've also seen the worst happen. Like, is there really anything worse than Luna followed by FTX? I mean, followed by Silvergate. Is there anything like it can't get worse? Is my point. I don't think it can get worse. We've already seen the giants of the space completely liquidated to zero, and now we're seeing kind of like the central bank of crypto defaulting. And we're still holding pretty steady, so I can't imagine that things can get that much worse.
Yeah, I'm with you on that. I mean, it always can be some surprise that could happen, but if you're in for the long term and your game plan is measured in years and not weeks, you probably don't have too much to be too concerned about. Somebody's got a burning question. They're asking about Commander, when Enigma socks and underwear.
That's $1 million question. That's actually, so sometimes I think about like what we could have done differently. And I think if we just let the operation completely drown, but gave people merch, we might be in a better place.
Oh, Doggy was asking that. So maybe you got to do some redeemable NFTs or something. Do a little something there. Anyhow,
yeah, I defer all of these strategies to JT. I think you guys want merch. I think you guys should bug JT.
Yeah, I think at a minimum JT should be doing like those extra ripped, extra large, slim fit muscle shirts with Enigma all over it, right?
Yeah, I think so. I think we should get shirts with JT and Speedos on it.
Guys, going once, going twice. Last questions. Get them in there quickly. I'm paying attention. I'm going to check the AMA text chat. Don't see anything there. Going to jump over here. Someone's asking, can we get more pics of the operation? There was a great video. That was an excellent video you guys had that put out showing everything. But someone's asking for more pictures.
Yeah, no, for sure. We're going to have more videos when all of these. So we've got so many miners that have been installed since. The facility looks way different now than it did a few months ago. So we have a lot of videos in the making. I actually also want to have maybe a professional production, kind of showing off the whole facility. We want to brand it a little bit. So we've been adding some of our logos on the containers. It needs a little bit of polishing, but certainly I think we can do a lot on that front. It'll be fun to watch. All right, guys. Well, it was a very pleasant surprise that you came up here and actually made this very seamless AMA, asked some really good questions, and honestly did a fantastic job at engaging everybody in the community, and it was all voluntarily, so I really appreciate it.
Yeah, for sure, man. I am happy to help out anytime. Just tag me and ask, and I'll drop it. We've had a couple private chats. I'll drop my cell phone number in there if you need to reach me.
Awesome. Thank you so much.
I'm in now, so I'm definitely in now. Yeah.
Good. Because JT and I were talking about you on the side. We're like, this guy better get in.
Yeah, no, for sure, Matt. No, I'm in. I just didn't go in as big as I was thinking. When I went chatted with my wife, I'm like, hey, you want to put $100K into this? And she was like, you're gonna do what? You want to deal with who? Like, these guys, right? And I'm like, well, no. This is crypto.
Then you show her our profile pictures. This is Joe right here.
Yeah. And then anyhow, once I could start to see out of my left eye a little better, I was able to actually go in.
You sound like someone that belongs in the trench chat. That's where we go when we become single.
Yeah. No, it's good. But I'm bullish on the space, and guys, as I wrap it up, I will just say, as a trader, you won't risk more money than you can afford to lose. Like, it is still high risk. Your crypto, there's a lot of things we've chatted about today. You could get hacked. There's all these things that can happen. So, go into it responsibly. Like, if you're losing sleep at night because you're uncomfortable with what you've put into something, you're in too deep. All right. So I'll leave it at that.
Right. No, that's a great disclaimer. All right. Thank you again. Thank you, everybody.
All right, man. Cheers.
Just, tag me in the chat if you have questions. I'll get to it eventually. All right. Thanks. Bye-bye.